All right. So here is our mentee so far. It looks like we have folks from all over the region so far. I haven't introduced myself this evening yet. I'm Joanna. I work part-time for Future Harvest. I am a farmer in Baltimore County, in northern Baltimore County. My farm is called Good Dog Farm, and I run it with my husband. Yeah, I'm going to be the main Future Harvest person for these Tuesday evening gatherings for the level 1 group. So yeah, the way these will work is that we're going to have speakers each session. And then after that, we will go over some of the questions that folks asked on the Google Classroom, and also then just do some live in-person chatting and question asking of whatever might have come up over the last couple of weeks that you've been either, reading about, or as it warms up a little, maybe doing and trying out in person. So yeah, I'm just gonna make sure folks are all muted here. And yeah, I'm just going to mute myself for a second, and we can just let the mentee scroll for maybe about a minute, and then I'm going to turn it over to Michael, and he's going to tell us more about some farm finances stuff.
Joanna, just quickly, will you be able to give me the option to screen share in case I want to?
I'm pretty sure I can do that, yes.
You should, yeah, okay, that'd be great, thank you.
Sure.
Okay.
All right, I think we've seen the full scroll for the time being. I can post it again in a little while in case anyone joins. So I'm going to stop the screen share, and I'm going to turn it over to Michael. Are you all set for screen sharing?
Yep, I think so. Yep, looks so. I see you made me co-host, so I should be able to. Yeah. Yeah. Okay. Great.
Great. Thank you.
Thank you, Joanna. I appreciate it. Well, good evening, everybody. It's great to see you all virtually, mostly names up on a screen, but a few faces. I am Michael Riley. I'm the co-founder and executive director of an organization called Foodshed Capital. And so what I'll do this evening is tell you a little bit about our organization and why we do what we do, and explain how our mission really is to provide access to capital for small scale diversified farms. But we're not the only game around. There are others out there. There are other ways to get capital. Honestly, not a lot. That's why we started our organization, but there are other options. So I have a deck that might help just kind of speed things through and kind of help explain what we do. And I showed this at the conference last week. Did anybody by chance see our presentation at the conference? Couple people? Okay. So do you guys who saw it, do you mind if I kind of run through many of the same slides again? Because it might help the others. Okay, thank you. I appreciate that. I think will help the others and maybe give everybody a little bit better context for the conversation. So I'll go ahead and it'll hopefully be shorter than I trimmed it down quite a bit from last week. Okay, so I'm gonna skip right through past this first one. Let me do a slideshow first. Sorry about that. Okay, now we got it. All right, so Foodshed Capital. So we are a nonprofit. We're founded in 2018. And our mission, as it says there, is to provide financial stewardship to small, mid-sized farms and businesses promoting an equitable and regenerative local food economy. So how we do that is we operate a loan fund for farmers, patient capital loan fund. And then we provide technical assistance and financial training to support farms on their journey to being profitable, becoming profitable, and staying profitable. I'm a co-founder of the organization. I started it at a time when I was involved volunteering quite a bit in the local food system. I'm down here in Charlottesville, Virginia. I was volunteering on the board of my farmers market here in Charlottesville, and I'm on the board of VABF down here in Virginia, Virginia Association for Biological Farming, and had many relationships with farmers through that work, and then just being a customer of many farms. And my background was in finance and business, and I thought I could perhaps help with this problem that we know exists for farmers accessing capital. So we launched actually as a slow money program in May 2018. We were a very small program focused just on the Charlottesville, Richmond area. And really just didn't have a long-term game plan. We just wanted to get some loans out the door, and we made our first loan in January 2019 down here in Louisa County to Reynard Turner, who was the keynote speaker last week. February 2019, we formed our organization. So where we were just a fiscally sponsored program, we created our own nonprofit in 2019. We became certified as what's called a CDFI in 2020, and it stands for Community Development Financial Institution. Really not too critical or essential to you all and what you do, but just it helps us to raise some additional funding for the cause. So it's a nice distinction to have. It's a certification that's issued through the U.S. Treasury Department, and it really recognizes us for our work in serving populations that can't get capital from traditional sources. We work in the Mid-Atlantic. Again, we started in Virginia, and that's where all of our work was for the first year and a half. And then we branched out from Virginia, did our first loan in Pennsylvania at that time, and we've continued to branch out geographically. We've worked in Maryland, North Carolina, Pennsylvania. We expect to be doing work in West Virginia and New York this year as well. July 2021, we made our 50th loan. November 2021, we were awarded a USDA Regional Food System Partnership Grant, which really just speaks to our efforts to really try to help support regional food systems, otherwise known as food sheds. That's where we get our name, food shed. Most people outside of the food industry have no idea what that is. They think it's a building or something, but we know, hopefully most of us in the food system know it to be analogous to a watershed, and looking at sort of the bigger scope of food beyond sort of little localized local food systems. And we feel that really is the future success of food. Again, I talked about being a CDFI. I don't really need to go much into that. It's really for us to be able to tap into sources of funding to help us grow and develop. And it has been very beneficial. We were just awarded a $500,000 grant through the state of Virginia to help us in 2022 and 2023. For us, our mission is really about capital access. It's about providing that capital for farmers that can't get it otherwise. So you don't have to, put something on a credit card and pay, 23% interest, or, borrow from a family member, or just go through the agony of getting turned down by banks. Or, USDA has great programs, and we'll talk about that. But many farmers find those inaccessible as well. It goes a step further. It's really about the delivery of the capital. And so when we started our organization, we were, really just sort of trying to do things differently. And we've tried to carry that forward and look at just the process of making loans. We really want to seriously try to disrupt the model that exists around, extensive forms that you have to fill out. I mean, sometimes loans can literally, you have a stack of papers that you have to fill out, a lot of legal stuff that you got to read through, complicated applications, lots of, I know in some case lenders will ask for literally for things going back, 10, 15 years, things that had nothing to do with your business. You're like, why am I being asked for this? I've been in that situation, so I know what it's like, and I know how it's frustrating. So we're really trying. I think somebody is not on mute or something. If you maybe just check your mute.
5 reasons.
Okay. All right. So sort of aligned with that whole issue of delivery of capital, we launched the Black Farmer Equity Fund this year, which is a demonstration of our commitment to really looking at lending to people of color who've been not just marginalized from the food system, but the financial system as well. So we developed this as a way to excuse me. Apologize. As a way to oh my goodness, sorry. Get something caught in my throat.
Okay, take your time.
Oh. All right, sorry about that. So it is a way to create sort of this reparative structure for farmers of color that will hopefully try to eliminate focus on things like collateral and credit scores and high interest rates to reduce the risk. That's often what you see that sort of the processes that banks use. So our lending criteria, sort of a list of sort of things we look for. Again, we're working pretty much with small, it says small mid-scale, but it's a sort of a kind of a vague definition. We're really working with small scale farms. Firm commitment to what we call regenerative practices, but really eco-friendly practices, just farms trying to do the right thing to build soil health and biodiversity, stay away from use of chemicals. We do work with non-farm food businesses. The main criteria for those is that they must support local farmers in terms of their sourcing and the ingredients they're using, if it's a restaurant or something like that. Align with Foodshed Capital's mission, which is on our website. Again, we prioritize BIPOC and minority-owned and women-owned borrowers. For this is really not, this next thing is really not relevant to newer farmers, because we know it's really hard to have a track record of financial success when you're newer. And we'll talk a little more about working with new farmers and how we do that. As noted there, we do work with them, so we can discuss that a little more in depth during sort of the question and answer. And then eagerness to work with us on technical assistance. We really prioritize our technical assistance. Feel it's a critical part of the process. So we hope that when we work with a farm, that they are eager to engage with us in that process. And that process for us and including the terms is you go to our website, you fill out an application. There's a link. We don't look at credit scores. Again, we don't look, we don't require burdensome documentation. We do require some financial records. If you have them, certainly tax returns and anything else that's relevant. We always schedule a farm visit. Relationship building is critical for us in the work we do. So meeting with folks in person is really, really important. We obviously had to suspend it a little during COVID, but we've pretty much been back at it. We close loans on a quarterly cycle, calendar quarter. So, okay, what can you use loans for? Pretty much, a variety of things: equipment, infrastructure, working capital, land. We have actually not done any land loans yet, but we have a few projects right now going on that we expect to do early this year. And then bridge loans. We could talk about that and how we can marry our program with other opportunities that are out there through USDA and through state grant programs. For us, loan amounts currently go up to 50,000. We are going to try to do some higher amounts this year, but generally we like to keep things at 50 and under. Our rates are anywhere from 0 to 4%. So we have ways to buy. Our standard loan product is 4%. We have ways to buy down rates. We did much of our lending at 0% to start. So it's sort of baked into our personality, and we really do want to try to keep rates as low as possible. Terms can be up to 7 years for larger loans. Most of them are 3 to 5 years. And we just try to be really flexible. We offer grace periods. We know sometimes a loan's made, and it might not be the most ideal time from a production standpoint. So we will build those in. And then we typically don't ask for collateral. Again, this is what makes us different. We have asked for collateral, but for smaller loans, we typically don't. And when we do, we ask for non-extractive collateral, which is basically just the item that was purchased with the loan. So we don't put like a blanket lien on your assets or anything like that. Again, technical assistance is just so key. We try to make sure that all the farms that we work with have their books organized, and if they don't have a bookkeeping method, if they're not using QuickBooks, we get them set up on that. And we work with third-party providers to help with that. And really try to develop processes around, business planning and projections and that sort of thing. And then we hope that just going into the loan is sort of the beginning. And then once we close the loan, again, it gets back to that relationship and the commitment on the part of the borrower to be responsive to the process. We don't pester you every week, but at least, a couple times a year, touch base, again, help with, getting the books, up to date and all those sorts of things. And we do ask for our borrowers to sign a partnership pledge to, at least it's an honor system, but it's, just a pledge to say that they're going to work with us and stay in communication. To date, we've done 61 loans, $755,000 in financing. Again, very much leans toward, businesses, farms owned by women and people of color, or at least operated, not necessarily owned, but just operated. We know in a lot of cases ownership is, might be in one person's name or whatever, but we also know that doesn't mean much because it's really who's helping run the farm. And then, a little bit more of a sort of a overview of our work. Again, the geography is I think key here. I talked about where we do our work, and most of it is focused on the Mid-Atlantic, and I believe most of y'all are from that region anyway. So I talked about our RFSP partnership. It's a great project we have going on. Well, last 2 years, lots of really strong organizations throughout the Mid-Atlantic, including Future Harvest as a partner with us on this project. And really what its goal is to help develop a regenerative meat value chain. So the idea behind this is that smaller farmers need more sales opportunities and just the farmers market, restaurants, especially now with restaurants struggling so much. And so, it's not, we're not reinventing the wheel here. This is being done in other places, but just not enough, and not enough in our region. And so we're trying to provide some aggregation opportunities and ways to tap into some more institutional purchasing. Our goal really is to get, universities in the region, all universities in the region, buying local meat, and not just, saying they're going to do that and maybe buying it a little bit once a year, but consistently buying local, regeneratively verified meat. So if you're a livestock farmer, and you're interested in this, definitely reach out. We'd love to talk to you about it, and see what we can do. So there's a way to connect with us, our website, sign up for our newsletter. We're on Instagram, pretty active, a little bit not so active right now because the person who handles our social media is on maternity leave, so things are a little bit on not as active. We're still active, but and there's my email address. So that's Foodshed Capital, and I will stop there. I'll pause there, perhaps, and maybe we can open it up for discussion or questions about our work, and then use that as a bridge to talk about, what other options are there out there? Because again, we're not, we're proud of what we do. I think we have a good program, but there are others doing similar work, and there are others that are doing, things that that are different. We're not the USDA. USDA has their program. So yeah. So with that, I'll sort of take a pause and take another drink of water. Again, I apologize for whatever the heck that was.
No need to apologize. Thank you so much for that helpful info, Michael. And if folks can ask questions using the raise hand function, that would be great. And yeah, and I can also read things that show up in the chat. So the question from Nikisha is, how is the interest rate determined? And is there a number of years required to be in business in order to qualify?
Yeah, so I'll take the second question first. No, we do work, as I just briefly mentioned, we work with beginning farmers. I mean, I know that's what this group is, and so we are open to working with beginning farmers. Our main criteria there is that the farmer has certainly some experience in the past in some way that helps, and or some sort of training that would demonstrate that they have been given enough training and insight and knowledge from experts who have gone before them to understand what they're getting into. So hence the program that you all are in is a key example of that. Is that we would value that very much, and we would say, okay, you've been through beginning farmer rancher development program. There are other organizations around the country or in the Northeast, really the East Coast, that we've collaborated with, and they've got good programs, and so the same thing. So what you're doing, certainly, in our opinion, for what we do, sets you up for you to be certainly in consideration. And then as far as the interest rates, so the rate is, as I said, sort of a standard rate. So everybody's kind of offered the 4%. We do, what we're trying to do is, because we have a cost to lend. So like any lender, you typically have to borrow money from somewhere to be able to lend out. At the beginning, we did not. Because we started so small, we were able to just raise money philanthropically. So we had really no cost to that. It was just all grant money. And that really allowed us to do 0% lending, because we really didn't have any cost of capital, but there's such a limit to that. So as we grew, we had to begin borrowing money. Fortunately, we borrow money from individual investors who are aligned with the work that we do. So they like what we do, and they lend us money at fairly fairly low rates. And so we have to kind of just cover the cost of that. Typically, we borrow money somewhere around 2 to 3%. So we try to, factor in that we have to cover that cost, and then, build in a little bit more so that we can, we obviously have, we have staff and all that. We don't cover our staff costs and our administrative costs with our interest by any means, but every little bit helps. So we start at 4. We offer reductions, like we offer incentives like to do auto pay on repayments, and that reduces the rate down to 3.5%. And then through our Black Farmer Fund, we are currently able to offer 0%. So we raise philanthropic capital that helps us to offset our costs of lending. So through that program, currently up to, we've been able to do it up to $25,000, the largest with $35,000 loans, we can offer 0% loans. We're still, even at 4%, except for the USDA, I think we're still pretty much cheaper than mostly anybody else that does this kind of work.
And do you want to ask your question?
What's that?
Oh, I was just calling on someone.
Oh, okay. I'm sorry. Yeah.
Is that me? Sorry.
Yeah, sorry. Go ahead.
Oh,
Ben.
is there? No,
Sorry.
yeah. Thanks very much, Michael. I had a couple questions. Who are your main philanthropic funders, and what's your current capitalization? And then sort of a second category is, do you have any data or anecdotal evidence in terms of the recipients of your funding going on to then get other funding through other sources like USDA or others?
Yeah. Okay. So there were 3 questions there. Sources of our philanthropy, mostly foundations. So we get a lot of grants through private foundations. We get significant funding through our CDFI certification. So through the Treasury Department has grant programs that are open only to certified CDFI. So we've received some funding through that channel. And then I mentioned a similar one at the state level in Virginia that provided some funding to us. And then we have a lot of individual donors. These are just individuals who provide us funding. And then similarly, from a debt standpoint, we have pretty much, well, all of our debt to this point is just through private individuals. And some of these come through like foundations or through financial advisory firms, but they're all pretty much private individuals and trusts. So that was question 1. Question 2 was capitalization, right? In terms of what in particular?
How much funding are you sort of dealing with on an annual basis?
Okay, so this past year, we did $515,000 in loans. So this year, our target is to grow that to 750,000. So, we're right now, our cap table will allow for that. We don't try to, but we're committed to making sure that our debt does not exceed our equity on our balance sheet by 2 to 1. So we're somewhat constrained by that, but right now our balance sheet is strong enough to allow us to do, we expect up to about $750,000 in loans this year. So, and that's compared to the 100,000 we did the first year. So we've grown, quite a bit in just 3 years. And then the last question was, you have a last question?
Yeah, sorry, I forgot this. Oh, do you have any data or sort of anecdotal evidence about the recipients of your funding going on to then be successful in obtaining further funding?
Yeah, we're working on that. One of the things that we really haven't paid too much attention to is sort of like a credit builder program. A lot of lenders will, try to develop, establish good credit with their borrowers so that they go on and apply for a bigger loan. We have not been doing that because we do not report to the credit bureaus right now. It's something that we are kind of weighing and holding off on, just because while it can be beneficial to some people, it can be a big disadvantage to a lot of other people, particularly those that are struggling with credit. And we are very, very flexible. We get harassed all the time from people that we have to report to about like the way we look at like delinquencies and late payments. We're just very, very flexible about it. And that's kind of the style we want to stick with. We don't really want to be encumbered by, sort of the traditional like requirements around 30 days, 60 days, 90 days. So we're just going to have to continue to weigh that. We do hope that the farms we work with can go on and get, USDA funding, grant funding, and we work with them quite a bit to support that, applying for equip grants, other funding opportunities that might be available.
Our next question is from Jordan, who has her hand up, and then we have some questions from folks in the chat that I can read.
Hi, thank you so much for the presentation. Super interesting. I also have a few questions, if you don't mind. The first,
Sure.
What is the definition currently of your regional food shed, and do you offer any funding outside of that regional food shed? The second is in regards to the farm visit. Is that considered sort of an overhead cost that the organization assumes, or is that something that's like passed on to the borrower? And then finally, for the capital requirements, I know you said, I forget what the term was, but basically you don't place a lien on the whole place. It's just the assets that are being procured. Is that also true for sort of fixed, like immovable assets, like a small structure or something like that?
Yes. So as far as the lien, I mean, we would weigh that. I mean, again, it depends on what the structure. I mean, if it's like a pole barn or something like that, we typically don't. Just be honest, like we don't put liens on those kinds of things. I mean, if somebody's building a house or some bigger structure, then we'll take a look at that and see, what we might be able to do. I know that's kind of difficult to do because we can't just kind of come in and repossess a house. And the reality is, to be honest, we're not looking to do that anyway. I mean, it's just not what we're really looking to do. We hope. What we try to emphasize more than anything else is that our program is for the community of farmers. And we hope, and it's been our experience so far, that everybody we work with is going to do their best to pay back, because they know that when they pay back, it's helping strengthen the program for others down the road. If somebody encounters hardship, we know that happens. We know, there are health issues, there are relationship issues, things go wrong, and we want to be able to work with folks and not make life more difficult. So honestly, time will tell, and to see whether or not that's a process that comes back to haunt us at some point, but we have faith that it won't. And for 3 years, it's gone really well, and we've had almost perfect repayment to this point. So farm visit, no, we don't pass that cost along. We really don't pass any costs along to the farms at all. The only time there would be some cost, and I see this is a question in the chat, like, about if somebody doesn't have their, QuickBooks or the bookkeeping in order, as far as the technical assistance goes, we are hoping to continue to provide more of those services without any charge. But typically what we do is we work out some sort of a cost share. Again, we work with the farmer to see, what can they do? Like if there's a cost to have somebody come in and, do a soup to nuts, QuickBooks process, we may pick up some of the costs. We could roll some of the cost into the loan. Typically, it's it's really not that much to begin with, so you can roll it into the loan, and it really doesn't impact the overall repayment burden at all. As far as regional, we consider regional to be right now Virginia, North Carolina, Maryland, Delaware, DC, Pennsylvania, West Virginia, pretty much the Mid-Atlantic, but I'm not even sure there's really a concrete definition of what the Mid-Atlantic is. We also, as a reference, are going to be doing some work in New York. For folks that are outside of the area, outside of that area, we'll consider things. Again, somebody that maybe has gone through a program like this. Where are you from? I just out of curiosity, because you obviously asked about for some reason or another.
Well, right now I'm living in DC, but we are planning on moving to my family's farm in Mississippi. So I was just curious.
Okay. Yeah. I think that's something we'll have to evaluate. I think we're hoping to be able to do that. For us, it's just going to come down to how much capacity we can build, because again, we don't want things to get too away from us. We want to be able to keep that relationship going. Being able to do the visit, like if you're down in Mississippi, it's hard for us to get down there. With all we have going on, if we have maybe an additional staff person that maybe could do that down the road, we may look to do that. So, I would say if it were Mississippi within the next year, probably not, but maybe once we're hoping that, in maybe the next 2 to 3 years, we can do, our goal is to be able to do work pretty much east of the Mississippi. So we'll see.
Thank you.
Yep.
Great. So our next question is from Jennifer. She asked, you mentioned that you help beginning farmers determine if they are ready to take on debt, and if not, help them. Can you say more about how the farmer and/or you can assess that?
Yeah, that's a great question. I'm so glad you asked that, Jennifer, because we always try to emphasize how important it is that a business, any business or any individual, anybody, right, be ready to take on debt. Debt can be incredibly helpful because it can allow you to start your business or grow your business in a way that you wouldn't be able to do otherwise. I mean, for anybody that's ever owned a home, like home ownership is a great example in this country. I mean, most people in this country own homes because they're able to, do so through debt if they're able to get a mortgage. If we didn't have mortgages, most people would not be able to own a home. It's just unattainable, right? So it's that benefit that debt can bring to a business to purchase equipment or expand the operation, whatever it might be. But with that also comes, it comes the burden of having to pay back, being well positioned with your business to be able to, have that payment come out of your, your operations on a monthly basis or a quarterly basis. We do monthly and quarterly payments. And so what we do, particularly for newer farmers, is, all you can do is projections, right? Is you have to have a good plan in mind. We work with farms to make sure that, their business plan is sound and makes sense, that there are reasonable and logical ways to earn revenue. And I think more than anything else, it is about starting small, like not taking on too much. Like we've had some projects or some applications where, new farmers, we're looking to borrow, hundreds of thousands of dollars. And, it's really hard to make that work, right? Until you actually get up and running and, you know, can demonstrate that you're able to, you know, earn revenue and that sort of thing. So, so that's really just part of the, you know, the journey, is making sure that that it's the right fit. And more often than not, we might say, okay, you know, now is not quite the time. Let's try to figure out other ways through some grant funding. You know, that's, you know, there are opportunities out there to get grant funding, and maybe that's a good segue into, you know, just other options that are out there for funding. You know, USDA has, you know, their EQIP program. So, you know, if you're looking to put up a high tunnel, you know, you can get grant funding through USDA for, you know, projects like that. So those are, you know, those are some other options out there. Sometimes there might be some, you know, some local grant programs that you can tap into. Anytime you can get, you know, free money, obviously it's that you don't have to return. It's better than, you know, than a loan. But we definitely never, you know, for us, because we're not in the business of making money off of loans, you know, we don't push debt on anybody. You know, we want it to be the right fit. And you know, if we mutually agree it's not the right fit, then you know, we try to work with the farm to, you know, maybe find other ways that they can get things started.
Great. And our next question is from Chelsea. She said, thank you, Michael. If the farmer does not have QuickBooks or bookkeeping in order and you offer to help to get their bookkeeping in order, is that a service provided that costs money, or is that part of the relationship building process / overall loan process?
Yeah, good question. Again, as I said earlier, it tends to be both. It just depends the extent to which the work is needed. You know, for starting from scratch, we do work with currently with a third-party provider called Kitchen Table Consultants out of Pennsylvania, and they have certified QuickBooks experts who can help you get started. Typically, we'll share the cost. You know, we want there to be sort of a buy-in from the farmer, so you know, we'll share the cost on that. But there are other resources. I mean, Julia Shanks, who's part of this group, I guess, you know, Julia was on the call last week, and I assume you'll have discussions with her as well. She's got the farmer's office, and she does some similar work. You know, you might be able to find somebody locally that, you know, can help you get your QuickBooks set up. So there are plenty of options out there. But we, you know, to answer the question directly, we always try to work, you know, with the farm to say, what can we do? What can the farm do? And it really varies. We don't have like any set formula, because we try to be very understanding that everybody's situation is different. And so oftentimes, you know, we'll incur the cost. We are hoping we have a position budgeted for our team for our next position that we're hoping to hire probably by the springtime, would be an on-staff QuickBooks expert, certified QuickBooks person. So we hope that will really help us to, you know, deliver that service free of charge, because we can get that funded through our grant funding.
Great. And then Andret asked, oh, sorry for the barking. What does the application process look like? And what is the smallest loan that's been approved?
So the application, we try to make it pretty, you know, informal and more of a narrative process. It's, you know, it's not short, and it used to be very short, but I think, you know, we've tried to make it, you know, pretty specific. Like, we ask specific questions. I mean, you can go to it on our website. There's a link that, you know, brings up the form. You can, you know, you could sign. You kind of have to sign up, I think, to at least take a look at it. But you know, you can sign up for an account. You know, doesn't mean you have to actually go through fill out the application. But it asks very, it's sort of very specific questions about, what's the purpose of your farm? Tell us about your practices regarding, soil health and biodiversity, water quality, things like that. And then we, as I said, ask for some financial information. We try to keep it limited and relevant to what we're looking at. Obviously, if you're a new business, you're not going to have any kind of tax returns. We do require that there's some sort of legal formation to the business. So forming an LLC is really important. If you want to start a farm, that's a good step. I mean, you can incorporate, but we find that almost every borrower we work with is an LLC. They're really simple to set up through your state corporation commission. So that's important to the process as well. As far as the smallest loan, the smallest one we've ever done was actually $400. That was for some training that a small business person needed, but that was unusual. Beyond that, I think the smallest really now at this point that we would really, it's not like anything's too small. I mean, honestly, if you have a small need and borrowing money helps, it's a lot easier for us to do a $2,000 loan than it is a $50,000 loan. So we don't ever turn anything away because it's too small. I mean, we'll do small loans. We don't mind doing that, particularly, if it helps somebody get started and it can solve a need and give you a little jump start. Yeah, particularly for newer farms. So yeah, there's really nothing, a lot of lenders would, say, well, there's the cost of, the cost of the transaction and all that. And yeah, there is, but for us, we just want to be there to help. So it sounds kind of hokey, but that's really what we want to do. And so if somebody needs a couple $1,000s or something, but we find most of our average size loan now is $19,000. So we find that most applications are somewhere in the $15,000 to $50,000 range.
So Denise asks, what percentage of loans do you approve?
That's a good question. We have trouble keeping statistics on that because we rarely just deny. We really just go the whole distance and deny somebody. It just honestly, it just hasn't happened to this point. Will it happen? Sure, it may get to that point as we get a lot of, a lot more applications, a lot more folks hearing about us. We're limited, of course, by how much we can lend out based on how much capital we have. But we've been very lucky to this point in that we've always had enough capital to meet the needs that are out there. We've had loans that have been kind of turned down, but I mean, they've been for some other reason that sort of short-circuited the process before it really even went far enough for us. Typically, those would be just loans that were too large for us to handle. Even though we do stipulate on our website, our limit is $50,000. We sometimes, we've gotten applications for $300,000. We have people email us and say, hey, I need, $300,000, $400,000 for this or that. And we just say, sorry, we're not capable of handling anything that size. The geographic issue will come up sometimes. We've had applications that are just outside of our geography, and we just say, look, we don't have the capacity for that right now. There was one loan that I'd say we turned down just because we had sort of reached our capacity in terms of what we could do. We probably could have handled the loan, but we just didn't feel like we had developed a good enough relationship with the farmer. They were not really too interested. They were a conventional farmer, so they're using pesticides. And we're not totally closed-minded about it. We know that some farms, in their journey are struggling with, weed pressure and, pests and things like that. And, they use pesticides, and that might have been their training. And we're not necessarily opposed to that. We just want to see that there's a commitment to moving away from that and moving in direction to more of a biological regenerative type of approach. In this particular case, the farm was not. They were just like, this is what we do. We're conventional. We need the money. Give us the money. And it was kind of like not a very collegial sort of feeling that we got from it. And we just said, look, this is not a good fit for us. And we already had a huge pipeline of loans that we were trying to close. So it's sort of a long-winded way of saying that, like, we just, to this point, we try to meet the needs as long as, again, we feel like the farm is aligned and that there's a relationship that we can develop, and that, there's a good back and forth.
All right. And Kamisha asked, are there restrictions to what is allowed on the farm? For example, if farm experiences are offered, such as pick your own or petting zoos, that would disqualify it as a farm?
That's a really good question. Actually, these are all good questions, so I shouldn't preface that every single time. But we want to see that farms have diversification. So as our name says, we're food focused. Like, we fund food farms. So, like, we don't fund, like, if there's a farm that's just growing, that's just like, we get this all the time, hemp. We don't fund just 100% hemp farms. We wouldn't fund somebody that's growing fiber. We get obviously flowers are very popular. We've funded quite a few flower farms, but they're usually diversified, and there is some food being grown. So we want to see food in some way, that there's some contribution to the food system. This is for our work. You might, others might not necessarily have this restriction. But so with that said, we do like the diversification. So if somebody is also doing some agritourism, running an Airbnb. We've had several borrowers that have an Airbnb on their farm as another revenue source. Looking at other ways to diversify revenue streams. That's something that we really embrace, and we encourage that, because, again, farming's hard. It's hard to make money. We all know that. And so finding ways to diversify and to provide other streams of revenue when maybe it's a tough weather year or something like that. Those are good hedges. So absolutely important.
And then Ben asked, from your view as a lender, are there pros or cons to different business structures such as LLC, sole proprietorship, or incorporation?
Not necessarily. We just find that an LLC works for most people. We prefer to stay away from sole proprietorships. It's not the end of the world. We just feel like, with an LLC, there's just a little bit more potential. I mean, I can't really give a real concrete reason. It's just that that's kind of what we encounter most of the times. You can incorporate. I mean, incorporating is also fine. It's just there's just some more hoops you got to jump through. LLCs are just, for a lot of people, just really simple to set up, pretty simple to maintain, simple to file your taxes. So yeah, why not keep it simple? But if somebody wants to incorporate, that's fine too.
Awesome. So that's the last question that I'm seeing in the chat. Did anybody have any other questions they wanted to ask Michael? Either you can raise your hand or type it in the chat.
Good question about the tax return. Typically both, particularly if it is an LLC. And we do that for two reasons. One is we want to see if the farm, if all the income is coming from the farm, typically, the farm return, the business, whatever that schedule is, I forget, that's for the LLC schedule when you file your personal returns. Usually that's fine because we can tell, like, okay, what kind of income is coming, is being generated from the farm. In your case, as newer businesses, you're probably not going to have that anyway. So we bring in the personal return as a way to get a bigger picture of like what other income is out there to support payback of the loan. So if you have, in most cases, you're going to probably have an off-farm job, or you might have a partner that has an off-farm job. So that can help us to give assurance that, okay, there might not be enough money from the farm to pay this back over a couple of years, but if there's income, off-farm income, that can support it. We also want to know about personal income, because for the fundraising that we do, particularly as a certified CDFI, we typically have to report that our work is indeed helping underserved borrowers. So we want to make sure that we're, because we are, we're concessionary cheap capital. We want to make sure that somebody that has a lot of my dog's getting yelled at. That you might not have heard that. I don't know, maybe you did, but we want to make sure that somebody like doesn't have like a tech job and is making like $400,000 a year, and like, hey, they're like, it sounds hard to believe, but a lot of people who are savvy about that stuff, they might say like, hey, here's this like cheap loan I can get, for 4%, whatever. I mean, rarely happens, but we just have to be careful and make sure that we're doing what we say we do. And so we asked that we see personal returns, just so we have a sense of what the income is.
Yeah, and you were mentioning about this, the tax documents. It's just for folks' reference. It's a Schedule F when it's your farm.
Yes, thank you.
When you're an LLC and it's your income from the farm, I believe it's a Schedule K1.
Yes. Yeah.
Just for something to look forward to.
Thank you, Joanna. Yeah, because our lending director, India, would have been on this call with me, and she would have been able to come up with that, but she's out all week. So thank you for mentioning that. But
Sure.
yeah, and I mean, just lastly, I mean, I know it's top of the hour here. We didn't really talk about other alternatives out there. I would recommend, other options on the presentation last week. Some of you saw Steward Lending. It's gosteward.com, I think it is. Go Steward. I think this is right. I might not have typed it in right, but gosteward.com. So they're similar to us in that they are trying to help smaller farmers get capital. Their process is a little different. They have their interest rates are higher, I think typically 7 or 8%, and they have a requirement that the farmer has to go through their network to help raise a certain amount of money, sort of like a crowdfunding type of process. But they do bigger loans than we do, and they do more loans than we do. So they just have a model where they're able to, I guess, attract a lot of investors. And so that is an option. We work with them, as hopefully was attested last week, in collaborating on the presentation. we think highly of the work they do, and I think we're basically trying to solve the same problem. We just come at it a slightly different way. So I recommend them. And then USDA FSA program has their microloan program, and we probably could talk 20 or 30 minutes about that. I'm not an expert by any means, but I know many farmers have used it with a lot of success, and it's also cheap. It's 2%. You can borrow up to $50,000, and that's their microloan program. Of course, they have their their land program too, which I don't know much about, but a microloan program, and some really generous terms and all that. And so I know again that many farmers have used it. We also have had many farmers who have come to us instead of the FSA because they don't want to deal with USDA. They don't want to deal with the paperwork and the hoops and it's the turnaround time. USDA is notorious for taking forever. Even the interactions that we have with them, it's amazing how long they take. So if you have a long time horizon, it may work, it may be fine, but if you're looking to borrow money over within a 3-month period, highly unlikely that USDA would ever turn anything around that quickly. Our loans typically are approved, as I said, on a quarterly basis. So that means generally within a 3-month period. So this is a process we just recently moved to. We used to do it on a rolling basis, but it got really difficult to manage. So typically what we see is, we try to encourage applications to be in at the beginning of a quarter, either before the quarter starts or toward the beginning. So that would be kind of like around like this time, for example. We have a lot of applications that have come in, and we're working on those. We'll have, loan committee meetings over the next couple months. And then by March, we would expect all of those to be funded. So pretty quick turnaround time. And if somebody is really in dire need, has an urgent need, we feel it's a good fit, we'll move pretty quickly. I mean, we've closed some loans sometimes within 2 weeks, particularly for a bridge loan. Like bridge loans are something we're always eager to do. So we've closed some bridge loans really quickly. Like we just did one at the end of last year that we turned around in 2 weeks, just because the borrower, the applicant already had received a grant. They just couldn't start the work yet because they had, the grant was a reimbursable grant. And so we were able to give the loan pretty quickly.
Well, thank you so much, Michael. It was so helpful having you here, and we really appreciated hearing about all that you do and all of your helpful guidance. So thank you.
You're welcome.
Yeah, you're welcome to stay, or you're welcome to take off. We're just gonna...
All right. I'll say goodbye and let y'all do your thing. It's great to see everybody. Thanks so much for the opportunity. I appreciate it.
Thanks, Michael.
Have a good night. Yeah.
So we're gonna shift gears a little bit now. My thought is just to, I know we've been sitting for an hour, but my thought is that we probably won't take a full hour to go through the rest of what we're going to talk about this evening. So my gut instinct is to just plow ahead. And if you need to take a break and go to the bathroom or eat food. I also meant to say at the beginning of this, you are welcome to eat during these calls. I hope everyone has felt welcome to do so. I know this is like peak dinner hour, and I was eating off camera too. So please feel free to bring your meals and share them virtually with all of us. So, but anyway, so I'm just gonna plow ahead and answer some questions that were brought up on the Google Classroom. So the first thing I just wanted to talk about was, so yeah, I know that was like a lot to start with as our first conversation, and also just to start the conversation by talking about going into debt, and I guess I just wanted to like reframe this a little bit. You know, I like that this first week of classroom material is, you know, a nice mix of like the nitty gritty numbers and financial planning, and also some of the more big picture goal setting and you know, kind of more thinking about why we're doing this in the first place. So yeah, all of it is important, I guess I just wanted to say. So like, even though we just started hearing from a speaker who was talking a lot about debt, you don't have to go into debt to start a farm. I guess I just wanted to say that. You know, I think Michael is coming from his lender perspective, and it's a really important one and a really useful one, but I also just wanted to say that that's not something you necessarily have to do to start farming. Something that, so for example, when when I started my farm in 2016, it was my now husband and I and a friend of ours. So it was 3 people, and we all didn't have any money to put into the farm. So we didn't really have a choice about whether or not we were going to put money in or not, because we didn't have any money to invest. However, we knew that we did not want to start at a hand scale. We had all worked on farms that were not mechanized, and just did not want to have that kind of farm. So we decided to get a Kiva loan. So I will, once I'm done talking, I'll put it into the chat. But Kiva is a crowdfunded loan. So what I liked about that was that it was a great way to ask, you know, you can certainly reach strangers through Kiva who are, people are loaning you very small amounts of money. You are asking for, you know, our first loan was for $5,000. So in a lending scheme of things, that's pretty small. To us, it felt huge. And people are loaning to you in increments of like 25, as small as $25. And what I liked about it was that I knew that people were going to get that money back. So it didn't feel like I was asking for folk, you know, it was a nicer ask for me. That's how it felt good to me. And it's a 0 interest loan, and you pay it back over 2 years. Sometimes they have grace periods, sometimes they don't. It's a little bit of a strange process because you're just going through this website. It's very hands off. Like, it's really the opposite of Foodshed Capital. Like, you're not getting any sort of hand holding or like resources. Sometimes you don't even talk to a person. So it's kind of strange, but it worked really well for us. And it seems to be more, it's very like, I think it's more popular. Like, many of the other folks, many of the other lenders on there are from other countries. I don't think there's a ton of loans going into the US at this point, but it was no problem for us to raise the money in the period of time that they give you, which I think is like 2 weeks. There's a lot of people who are just on there, you know, reloaning their money every time they get it back. So it's really cool. I highly recommend it. I just wanted to put that out there as another resource, and everything I'm going to talk about, I will make sure that I add to the Google Classroom page as additional resources for folks. I'm also going to link to some stuff about USDA loans that Michael was referencing. And yeah, so now, did anyone have any, but yeah, Ben, go ahead.
Sorry, I have a lot of questions
Okay.
tonight, apparently.
No, it's great. I'm sure everyone else, other people have them too, so it's great.
I was just curious in sort of a broader conceptual sense, how did you specifically go about prioritizing your startup costs and what you would, you know, seek different funding for different chunks of that? You know, like equipment versus infrastructure versus supplies, operating capital, labor? How do you, are there guidelines and sort of how to think about that or prioritize that? I know some of the worksheets and handouts gave a little bit of a framework, but didn't know if you could talk a little bit more about that.
Sure. So let's see, our first loan was for building a high tunnel, which, we did also get an equip grant eventually, but it was like the way that equip, so that's the funding that Michael mentioned in order to get, you can get reimbursed for building a high tunnel. The way that the funding cycle worked, it was like we weren't going to be able to get it for quite a while. So we knew that we wanted to start sooner than that. So we also knew that we all had experience with winter growing. So it was important to us to get that kind of like started right away and have that be kind of our signature starting point. We also all had off-farm jobs and did not intend to farm full-time for quite a while. So, we weren't looking to cover our living expenses or anything. We were just looking to kind of like start farming in a way that generated enough money so that we could keep reinvesting into the business and grow it. We also borrowed a ton of stuff. So we, my husband was managing a farm at the time, so we borrowed a lot of small tools and bigger tools from there. So, we just like worked our networks in that way. So we did not prioritize. However, the first like commercial loan that we got was for a tractor because we knew that that was going to be really important to the way we wanted to grow food. So, yeah, I think some of the resources that were on the classroom page were maybe a little more specific than I'm being, but that was my personal experience. So yeah, so I was gonna see, so yeah, some of the questions that I pulled out from the comments that folks left were about like digital. So Catherine P, I'm not sure if she's here tonight, but her question was about digital record keeping systems and whether there were like recommendations on the best systems or apps or any magical things out there that might make it easier. There are a lot of apps and like I feel like every time you go to a farm conference, there are lots of like booths of folks presenting different types of apps and software that they have to keep better records. I know for financial record keeping, I would say that like most folks I know are still using QuickBooks, and QuickBooks Online has also gotten a lot better in the recent past. I know people have started, when it first came out, people were really down on it, but now it seems to have a better rep and it works well for people because it's so much more mobile. So also there's a video from, I think a couple years ago that was recorded for the BFTP, or it's like a recording of a talk over slides that the farmers at Dicot Farm put together for us. That's all about how they use Google Sheets for their record keeping, which is just the Google version of Excel. So yeah, I think Google Sheets is definitely the most, you can do a lot with it or you can do a little with it. So I'd say that's a great starting point, just so that you can keep everything in one place and then play around with your numbers as you get more of them over the years. Somebody else asked a question about, Grace was saying like, it's hard to know what you don't know yet, right? Like there are, it's hard to make predictions when you don't have any data yet. And that is really, really hard. There's no way around that. That is a hard part of your first year. I would say that is where this program can come in, and talking to other farmers just to get a sense of like what their books looked like their first year, whether they're willing to share that. A lot of farmers are when you have a personal relationship with somebody, I don't think people are like broadcasting it necessarily, but if you are volunteering at a farm or working at a farm, it can be, I think that can be a great way to just get a better sense of it for yourself as to like what a starting point might be. And so yeah, so what I was going to say about the recorded webinar, anyway, I'm going to post that. I'm going to track it down in our Google multiverse and make sure that that's available for you guys, because they have some really great tips on record keeping and using those records to then create your crop plan. So it's really, really helpful. Oh, Airtable is another tool that I know folks are using more and more as a way to keep information and then, link those pages to each other. It's not how my brain works, but I know it can be a really helpful tool for folks. One other thing, so Stephen G asked a question about business structures, which I know some folks were also alluding to when talking to Michael, about like the pros and cons of different business structures. The University of Maryland Beginning Farmer Handbook is, I think that's what it's called. It's a resource put out by Extension. It is, I think it is very strong in that area of kind of like the more nitty gritty cut and dried pieces of starting a farm. So I will make sure that is on our website for folks to look through, because I think that that is the kind of thing you just kind of need to read through and hear about, just to think about what will work best for your operation. I know, like Michael said, I would say the vast majority of new farms are starting out as LLCs. My business is an LLC. It's pretty okay to set one up. It's not too complicated. It does, in Maryland, it costs $300 every year to have the privilege of being an LLC in Maryland, apparently. I'm not sure if that is the same in other states, but just something to know. Let's see, somebody else asked about resources for setting up a cooperative farm. That there's another, I'm going to post something about that too. And yeah, I guess a question that I thought might be interesting for us to talk about as a group, because I don't have, this is kind of more in the big picture piece of the conversation. Rita M had asked about how COVID is affecting people's goal setting for this year. And I was just curious if anybody wanted to share on that, or talk about how they have pivoted or adapted their plans based on this ongoing COVID nightmare that we are in. And feel free to just unmute yourself. We don't need to do the raise hand.
I'm happy to share something that I thought of when I saw the question. I didn't respond to it, but I think, being that this is going to be my first year, I'm thinking a lot more about joining community CSAs versus having events, or having like an invite to people that might want to be supporters and things like that. Like I'm thinking more of like delivery services instead of more in person. Like I'm not interested in having a farm stand for multiple reasons, but that's kind of a big one that I can see that being put off further for me just because of COVID.
Yeah, absolutely. Thanks, Catherine. Did anyone else want to talk about this?
I thought the restaurant point that Michael made was interesting as well, just given that they're struggling quite a bit, that if you're wholesaling to restaurants, it might be tougher now than it was previously or could be going forward.
Yeah, definitely. I think, selling to restaurants has always been, I think it's always been challenging in a way, just because, restaurants have such thin margins and farms also have such thin margins. So it's like nobody can really budge all too much in a lot of ways, but working with restaurants can also be really great. But I think that's definitely true that restaurants are still in a tough spot for sure. Did anybody else want to speak to that? I saw somebody asked about what some of the acronyms are. Oh, and those got answered. Okay, great. Yeah, I didn't know the ones beside FSA and NRCS. I actually don't know what those acronyms are. So, and it looks like Christy has experience starting a BLLC, which is a benefit company, which is pretty cool. So if you have questions about that, she offered to help anyone out, which is really cool. Thanks, Christy. All right, well, so yeah, I think I'll just make sure to add some of these additional resources to our classroom page. Did anybody have any other questions or just anything they wanted to put out to the group, or feel free to just go ahead?
Yeah, I was wondering, I can't find in my notes the days that Julia Shanks is going to be, like, didn't she mention she had a class that we could take?
Yeah, I will look into that as well. I think it might, my thought is that might be for the level 2 and 3 folks.
Okay.
I will double check about that and get back to folks.
Okay, and then with our class, so I went through all the resources and I saw that the assignment was to comment in the comment section with a question or an observation, but the planning, that's more for level 2. Like the goal set, like I don't like, so I'm an intern on a farm, but I'm very new to it. So I didn't know if we were supposed to come up with our own business plan, like in a dream, like ideal world, this is what I want, or are we just supposed to kind of be absorbing all this information and kind of trying to piece things together? I guess that's where I'm going with that.
Yeah, totally. So the farm business plan is just for level 2 folks, so you don't have to worry about that. If it's something that is appealing to you, you're welcome to dive in, but it's not a requirement for this level of the program. Yeah, and I did see that some folks had done the goal uploading piece as well, and some people hadn't. I don't think it's a requirement for this week, but I will get back to folks about that because I was a little confused by that as well.
Thank you.
Sure.
Joanna,
Question. You already go over the question regarding the grants repaying loans. I had to run to my daughter real quick. I don't know if you went over that already.
Oh, that's okay. We didn't, I
And
think
just for background, I'm just wondering because Michael spoke of like as far as how quick they're able to push out a loan. He said like 3 months or something. So it's like, a loan will be maybe easier to get than a grant if that takes a longer process. So I'm wondering, like, if you go with the loan first, can you repay it with the grant if you get that later?
yeah, I don't think there's any I mean, I think it depends on the lender, and I don't think there's any like hard and fast rule about that. I don't know if it's financially like the best a best practice, because the purpose of the loan in terms of cash flow, that way you only have to pay back a little bit over a longer period of time, so it helps your business kind of it helps you get started without having this big upfront cost. So I think for your business it might be not detrimental, but just, well, maybe detrimental to go from just like these really highs and lows of having like a lot of money in your checking account to like very little, and then over and over, you know what I mean? So I think, yeah, I don't have like a hard and fast rule on that, or a super clear answer on that, but it's something I could certainly talk with you more about.
Okay, thank you.
Yeah, and I know a lot of people were talking about the grant video in the comments, and I think I don't think that it is necessarily a bad thing to start a farm with grant money. I think a lot of the grants that were being talked about in that video were really, really big USDA grants that are super competitive. Like the value added producer grant is something that like, really big farms can get. It's like it's just a really, really big grant that is often for like an entire new enterprise, or it's like $100,000 kind of grant. So I think expecting to get a grant like that is not realistic for most folks just getting started. However, I don't think that it is unrealistic to start a farm with like a smaller, grant from a community organization or something like that. I don't think, like personally, I was not able to find any grants that were just like ready to go, like, gosh, we'd love to give this small farm a little chunk of money. I don't know of a ton of grants that are out there that are doing that. There's something called the one that I know of is called the Fruit Guys Community Fund. I can put that in the chat in a second. That's a small group that I know has given will give small grants to farms. I think largely to do like conservation projects, but yeah, I guess I kind of wanted to just say grants aren't necessarily a bad way to get started, and I don't think there are a ton out there that are really well designed for starting up a small vegetable farm. So kind of a good news, bad news there.
I have a question, Joanna.
Yes.
Actually, a couple questions. Since you were talking about grants, so currently I have a full-time job and I make a certain amount of income, and it's paying my bills. If I apply for a grant and they see that I make this certain amount of income per year, are they going to deny me my grant for the farm?
Do you mean more like for a loan?
I'm talking about grants.
I mean, that I don't know, because I don't know what the grant would be in the first place. I think it really depends. I know for a loan, it would make you look like a more qualified candidate.
Right.
But for a grant, I'm not sure. It depends if it's like I don't know. I'm sorry.
That's okay. And my other question is that nutrient management workshop that's coming up. Is that for people who already have a farm, or can aspiring farmers register for that workshop?
You can certainly register. I would say it would be most useful to folks who are a little farther along, just because it's going to be pretty detail oriented, and like I think it would, I know at least for the way I learn, it's a lot, I learn a lot better when I'm using my own, when I have like for example, I took a QuickBooks class before I had my farm, and
Yeah.
it was helpful, kind of like learning the concepts and the vocabulary of it was helpful to me, but I didn't really learn how to use QuickBooks until I was in it and using my own numbers. That's just how I learn. I know it's like most helpful to me when I am just really doing it myself. So I think I'm not exactly sure. I can ask the organizers whether there'll be like some, whether it would be a good fit for folks kind of earlier on in their farming, but yeah, I can ask about that too.
I was just curious, and if I did register, would that count as part of the on hands farming
It would count as a field day, yes.
field day? Yeah, that's what I'm saying. All right, thank you.
Sure. Ashley, go ahead.
Hi. So I have land. I have no farm. I'm trying to start a farm. So I am using Excel spreadsheets, and I'm just right now listing out, all right, what seeds am I buying and how much money am I spending? And I found like a yield calculator online that I tried to work back. So if I'm like, if I want to have this many pounds of tomatoes, how many plants do I need? And then buying seeds off of that. What kind of record keeping would you suggest at this stage? Like, have no numbers. I have no anything other than this is how many tomato seeds I have.
Well, yeah. So you definitely want to keep track of how much money you're spending, because that way you will have a better sense next year of, what your supplies are going to cost. You see what what you needed to spend in order to make X amount of money, hopefully. And, you can see how that might scale in years to come. Yields are a great thing to keep track of. So how much space also before that is like planting dates. So you can figure out, okay, well, I seeded this on X day, and then I took it out of the greenhouse or the grow lights or my backyard or whatever, and I put it in the ground on this day. And that way you can have a good sense of how that works. And
That is exactly what I was looking for. That's the question that I asked in Google Classroom. Like, what other information like that should we be keeping track of? Like, I don't need to know about financials right now. I need to know about how do I do this next year and then start getting the financial aspect.
Yeah, just anything you're doing, write it down.
Anything I'm doing right down. Okay, so it sounds like I'm not a crazy person then. I came up with this master spreadsheet that I'm using like filters and stuff, and I'm looking at, am I starting outdoors? Am I moving it outdoors? Like all of these things. So, okay, just keep taking notes, and even if it makes me feel like a crazy person. All right.
Yeah, totally. I mean, it really depends on how your brain works. Like for me, yeah, I like to just know everything, even like, and also I'd say like over the years, you can start keeping track of a lot of things. And then over time you can say like, oh, okay, I kind of know this already. I don't really need to keep track of this. Or, this isn't actually answering a question for me. So you can kind of pare down over the years, or you can stay really detailed, and that's great too. And, as there are some things also that you want to be keeping track of, like that we'll talk about as we move along through the coursework, like for food safety and for nutrient management and for pest control and things like that. But we'll go through it.
Thank
It
you.
looks like, yeah, it looks like Jennifer has a question.
Yeah, thank you. So even after the orientation, I tried to get in and the Google Calendar with the dates on it. I was just wondering, mine only has like assignments listed. There aren't really any dates of anything else, and there's nothing past March. That's fine if that's what everybody else's is. I was just wondering if there's another calendar that maybe I should ask to be connected to.
Yeah, there is a second calendar. So it looks like there's like the gray dots. Oh no, so you're talking about the orange things? Are they showing up as little orange bars for you?
Mine are showing up as brown bars.
Okay, but they're bars instead of little dots. Is that right?
I think they're bars when you look at day version, and they're dots, but no, I think they're bars.
Okay, yeah, so there should be another calendar that's just called Beginner Farmer Training Program, not level 1.
Right.
And that is gray dots. So I will make sure, I have both. I don't know, how many, do other people have both, or do most people just have the one?
Amy Rose also sent around a whole series of individual invitations for the class sessions today around like 4:30, I think. So I think that helped fill out my calendar a bit as well. I don't have the gray dots though.
Yeah, same here.
Okay. Well, I'll explore the bars versus dots and hopefully get that cleared up so it's easier.
I do have gray dots, and I have just the beginning farmer training gray dots.
Okay. Oh, it looks like Christy has another link for us. So we'll try to get that clarified for folks. Sorry about that. Kenneth, did you want to ask your question?
Yes, hi all. I was just wondering, what is the access code to the Google Classroom? I haven't been able to find the access code.
I will put that in the chat.
Thank you.
Sorry about that. Here we go. Send it to everyone. And Paige, you had a question.
Yeah, and I'm sorry for the folks that already have access to this, but for some reason I just cannot find the Google Classroom again.
That's okay. Here, I will put that link in the chat as well.
Thank you.
Sure.
I do have a question about sort of, so we recently bought the land that we're on. So I wanted to find out what resources you have or what thoughts you might have on doing like an initial soil test and then tracking the health of the soil as time goes on so we can figure out what's working and what's not.
Sure. Well, we're definitely going to hear more about that at our next. I'm sorry, I want to write down one thing before I forget it. At our next gathering, Lisa Garfield from the Million Acre Challenge is going to talk about soil health, and they're partnering with PASA on this big regional study of soil health in our region, which is very cool. But on a smaller scale, so I think, Becky, you're in Virginia, right? Is that right? So I know for
yes, I'm out by Charlottesville.
Gotcha. So I think like where I am in Maryland, most people send their soil samples to University of Delaware, to their lab. I think that Virginia Tech has, or maybe VSU has their own soil testing lab. I just know Maryland doesn't. They don't do any of their own soil testing anymore. So, and I think it's like the way that the lab works to make their measurements and calculations is like, if you have soil in Virginia, you will get more accurate results using a Virginia lab, is my understanding.
Okay.
So yeah, I would say just go ahead and take some samples and send them in. And then, over the years, hopefully you'll be able to see changes and improvements. I think there will be some resources on interpreting soil test results as we move through the classroom. So hopefully that can help you. But I guess, were you thinking like how many samples to take? Is that what kind of the question you were after?
Sure. I've never taken a soil sample.
Can I help? I live in Virginia.
Yeah.
I contacted my local extension office. So if you go to the Virginia Cooperative Extension, I don't know the link, you can find your local extension office. And then I contacted them and they sent someone out to my house to actually teach me how to take soil samples. And she brought, it was great. She brought like all the tools and she taught me the whole process. She showed me how to do a couple, like demonstrated, then she had me do it myself. And it was, I have 3 acres. So she showed me like where to go on my property because you want to take a variety of it. And then I mailed it to Virginia Tech. I think it was a total of $25 for 6 samples. And I checked like all the extra stuff because I want to know everything. And I'm waiting for my report, but they make it really easy. And there's people to come to you to help you.
That's great. Thank you.
That's so awesome. What a nice service. I'm putting another book recommendation in the chat. It's a book called How to Grow More Vegetables by John Jevons. And that is another, a really great book for predicting yields. It's really, really hard to know when you're just getting started on your own growing space, but this book is a really great starting point. And it's very like just tables and tables of different vegetables and different growing conditions, and it's super helpful. So I highly recommend that book. And it's pretty widely, like, I think you could definitely find it at a library. It's pretty, it's been around for a long time.
I have a question, and this may be covered in more detail like in our next sessions, but I'm really curious about the transition between gardening and farming. I initially started out with like just growing food for myself and my family, but what really inspired me to be a farmer is just like the deep excitement that I saw and how I felt sharing my harvest with like a larger and larger group. And so that's what really started the journey for me. And so I've definitely like started doing what we talked about on this call, which is like being more systematic about like, okay, how much am I spending for seeds? How much am I planting? And so I've started that note-taking process. I can start to get an idea. But my question is like, when you're trying to make that transition from gardening to farming, what are some of the first steps to kind of stick your foot out there and start experimenting as far as like food safety and really trying to figure out like, okay, who can I actually sell things to and how to do that, like following regulations and just a way, like different ways people, like any of you guys have started that transition, experience like the transition from gardening to farming.
I can certainly speak to that. Does anybody else want to speak to that first? Okay, well, I can start that conversation a little and then other folks please pipe in. I mean, I I guess I didn't quite make that transition myself. But in terms of, I mean, the food safety piece of it, you know, we'll definitely get into that. There aren't like the size that we are all growing at this point. There are not really strict laws about what is and isn't food safe at this point. So there's the food safety police is not going to come banging down your door and tell you you can't sell vegetables to somebody. So I would say if a customer has a specific food safety certification that they require, they will tell you. So if it's a GAP certification, you know, in Maryland, there's a specific program called Maryland GAP. That's a state certification. That's kind of like a stepping stone to USDA GAP. So yeah, I would say don't be too intimidated by that, because we will talk about food safety best practices so that you are certainly offering your customer a really safe product, but it doesn't have to be something that, you know, that should hold you back in your pursuits. Yeah, I mean, in terms of like finding customers, I guess it depends what kind of what you're looking to produce and what kind of sales you want to do, whether that's wholesale or a farmer's market or a CSA. Yeah, it really depends based on those different types of markets. Do you want to kind of talk more about that, or maybe some other people can share about, I mean, like what we started with wholesale because we wanted to have the flexibility that wholesale provided, because we didn't have to show up at a farmer's market every week. You know, we were still all working full time. So that was a time commitment we weren't willing to make. And we also wanted to just start by growing a few crops and figure those out for ourselves and see how they worked and see if we could sell them. And then once we felt more comfortable with that, we we started incorporating a CSA, and now we are vast majority CSA and just a less so wholesale. The difficult thing about starting with wholesale is that if something went wrong, it really went wrong, you know, like that was a large piece of what we were hoping to sell. And if that crop failed, then we had a lot less to sell. So it is a little risky in that way, but
I see. Okay, that's very helpful. And I think like that first piece about like maybe the regulations aren't as strict as I'm thinking is very helpful, because I think that just the thing that I want to make sure I get right is, you know, following the laws of the land. And so like and we talked about at the conference, like you start with your, you know, smaller circle of influence, friends and family, and then it can spread by word of mouth. And so that's definitely something I want to take advantage of. But like, I'm still not sure, like at what point you need to, you know, have like things registered and maybe have like a more formal process for how you're like, say you like wanted to create, you know, some value added products, say, okay, you grow some tomatoes, you want to make sun-dried tomato paste or something like that. Like at what point, like when do you need to start being more formal about like maybe creating labels for things and like, or having your bottles, how you're packaging things, like basically the timeline for like regulations as you start to scale, I guess, and making sure you're doing that correctly.
Yeah, so I mean, generally, I would say everybody who's growing food should have a food safety plan. And that is just an internal document. It doesn't have to be something that you like submit anywhere, but it is a best practice in order to make sure that you are growing food and processing food safely on your farm. In terms of value added production, that is a whole other ball game, and that is where a lot of regulations are going to come in, and a lot of paperwork and inspections and labels and certifications and things like that. I don't have a ton of experience with that. I have a little bit of trying to get it going. I don't know if I do know it's like worlds apart in Maryland and Virginia and Pennsylvania as well. So Maryland is I can't remember, Michonne, if you're in Maryland or another state, but Maryland is like 1 million regulations, 1 million inspections, 1 million agencies you have to deal with to do anything.
And I'm a little daunted by it, to be honest, but I'm
Yeah.
definitely gonna try to push through for that. Yeah.
Virginia is very much more lenient, and same with Pennsylvania. I think because they do have, I'm not sure exactly why, but I know, like, for example, friends of ours were selling dried peppers at their farmer's market, and I messaged them like, oh man, how did you get how were you able to do that? You know, and they're like, oh, we just put them in the dehydrator and then brought them to the farmer's market, and it was no big deal. And I was like, oh my God, that sounds great. Like in Maryland, you could not do that. Someone would be very upset if you did that. And that is the kind of thing where people will, like, for example, if you're at a farmer's market and you don't have the right kinds of permits, you could, not be allowed to sell that anymore. So, Christy, it looks like you have some great information about this in the chat, and you have your hand raised, so feel free to go ahead.
Yeah, I couldn't figure out how to raise my hand for a while there. But yeah, I just wanted to let everybody know that the stuff that's in the chat is for cottage food items, which are things that are not considered possibly dangerous. I know you can't do anything with tomatoes or peppers, but you could do stuff with like strawberries and blueberries and things like that, and you can make bread. And this is all for the state of Maryland. So you can do all that without any kind of license. You just request a cottage food ID, and then you put that on your labels. So if there's a problem, the person can trace it back to the producer. And then for farms in Maryland, because I also had to look this up, what I found, now my stuff, I grow seedlings and plants, and that's like, I don't do produce, I do the actual plants, but I found that unless you're shipping out of state, there's not a ton of requirements. If you ship out of state, you do need certain things, but for just in-state, there was not a lot, but I shared a link there about that too.
Yeah, and I think that I have seen some stuff about like acidified foods, because those are another category. There's also something called an on-farm producer's license, where you're able to, as a farm, you're able to produce some things, which I think like canned tomatoes, if you are under a certain size and you are growing the stuff that you are making. But I'm happy to point you in the right direction. But I think I'm sure there's somebody at the state level who can explain it better than I can. We are almost out of time this evening. So if anybody has any last thoughts or questions just to wrap us up, feel free to go ahead. All right. Well, I hate to end on a note of bureaucratic nightmares, but but I will instead say thank you guys so much for joining in tonight and listening and engaging and asking questions. It was so great to see you all and hear from you all. It looks like Ben has one final question.
Sorry.
That's okay.
I was just curious, is there like I don't know, a profile section or anywhere that we can see the little profiles that we had to submit for all of our classmates?
That is a great question. I will ask Amy Rose about that. I know in years past we've had like a directory for folks, and I think a lot of you can see a lot of people on Discord. So I think that's a good starting point, but it would be nice just to have faces and names and see where folks are located. So I'll ask if that's something that's going to be shared once it's all put together.
Thank you.
And you can see what I look like when I'm not snowed in with 3 kids.
Yeah, it is a major winter over here. Well, great. Well, thank you guys. Yeah, and so what's next is it looks like the next section in our workshop series, I'm just checking, we are going to be talking about crop planning. So it's very timely for this season. So that's exciting. And we'll get more into those record keeping, and, planning and record keeping are just each other's best friends. So we'll get more into that. So thanks everyone. I'm going to stop the recording.